Hello, and welcome to Pro Trader Strategies Market Commentary for Tuesday, February the 9th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios. Therefore, what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Not really any economic data to speak of. We did have NFIB, Small Business Index, which came in slightly lower than expected, and wholesale inventories was in line with expectations. So the overall market isn't really looking to economic data right now to discern which direction we're going to go into. But here we have the bonds. I don't show the bonds a whole lot, but this is a very important level. As you can see, we traded into the 167 handle of the bonds, which is quite remarkable. We haven't seen that for quite a while, but that's a major area of resistance and something to keep an eye on, see if the bonds are going to do it. Something funny I saw was on Twitter that somebody was spouting off that don't fade the Fed. Well, this has clearly been a fade the Fed move in the bonds. On to the Dow Jones Industrial Average. This is the Emini Dow Jones /YM, and they've held up pretty well today. As a matter of fact, the Nasdaq's popped back and forth into positive territory even yet this morning. So as you can see right here, we're just slightly in negative territory with the Nasdaq /NQ and down about 4.5 points right now. They did go down to test the low of yesterday, but failed on that and started rallying right off the bat this morning. Here's a chart of the Emini SPs /ES, and they too also went down and tested yesterday's low but failed there. So it's kind of like considered an inside day as of right now. We'll have to see how the rest of the day works out. This is the chart of the Emini S&Ps also /ES, but on a 15-minute segment breakdown. And as you can see, we've bounced back and forth on these value areas and an inside day for the most part. And, we're just going to have to see whether the bulls or the bears starts to win. Right now, the bears have the upper hand for the most part because we're pushing lower and well below the value areas. On to what I've done. I rolled some Qs, triple Qs, which is the Nasdaq ETF equivalent. And I did this because my calls really weren't helping me out anymore. For the most part, they were up here at the 107, 109 area. So I had on the March 107, 109 call spread. And I had originally sold that for 62 cents, bought that back for 12 cents, and then rolled that down to the March 100, 102 call spread for 58 cents. So the 100s are right here. And this has acted as resistance. Or as support, I should say, on the way down, and should act as resistance on the way up. So that's why I picked those strikes. They lined up pretty good. And I did that trade yesterday, late in the day. Probably could get it a little bit better today because, as you can see, we popped up and tested those 98. So you could probably get it off a little bit better today. Amazon they just took a stab in the dark here, and this is going to act as support right in here, this 143 area. So I went below that, just sold some puts, add a little bit of long deltas in case yesterday's bottoming out action holds. And it looks like the Amazon is really taking a dive, and they've done pretty well. As a matter of fact, Amazon, Google are probably going to end up taking over the world. Amazon's looking to open up several brick and mortar stores. I don't know if that's really a great idea, but at the end of the day, they've got all kinds of money to burn. So it's a pretty healthy company. So I just sold those puts naked. I'm not going to go for the 50% of my max profit on that. I'm going to look to cover that relatively soon if we can get a bit of a pop up in there. On to Yum Brands. Yum Brands, again, showed support strong ever since the end of August for the most part, and September, actually at the end of September, that's where we're starting to show support. But as you can see, it's bounced down here several times, tested that and rallied off of it. So I'm hoping to see this rally off just a little bit. So in Yum Brands, I put on the March 65, 62 and a half put spread and sold that for 79 cents. So I'm pretty close to that, and because I think it's going to hold support there. And then on to a couple other trades that I did. I did a IWM. Not sure why those charts weren't up, but IWM, I did the March, also 100, 102 call spread, sold that for 60 cents in there, and looking for that to hold this area in here. The 100 area is going to act as resistance just like it did in the Qs. So that's why I picked those strikes. A little confusing, but those are the pretty much the same strikes on the Qs and IWM. That's about all I got for you guys today. Friday's webinar is going to be on, we're going to be doing a couple of things where we're going to even add a course on how volatility really affects the premiums of these different options. And the reason why I haven't covered a lot of trades is because as volatility rises, it really kind of holds theta off, the time decay. So as we get that increase in volatility, theta can't really decay as well. So once you see that balloon deflate from that volatility perspective, then you'll see all that theta really come out of these different option strategies. So you're forced to hold on to these strategies a little bit longer, even if you're directionally correct on these. As that volatility pushes up, it holds those premiums in line, and then when volatility comes out, it will really quickly suck out of that premium. All right, so we're going to be talking about that on Friday, and we're going to be adding a course on that because it's really important to understand how volatility works and how that's really going to affect your strategies. All right, that's all I got for you today. If you can't take that, take it easy.